Hey, back from Alpha Charts with the state of the market video. Today is November 25th, 2023. Before we get started, this video is for informational purposes only. These are not recommendations to buy, sell, or hold any stock or security. And I may hold positions in some of the equities mentioned. Know your time frame and risk management. Thank you all for watching the video. Please like and subscribe to my YouTube channel. I really do appreciate it. You can also find me on Twitter, or X now as it's called, at Alpha Charts 365, at Alpha Charts 365 right there. And if you really like my stuff, I do run a subscriber group. I give a ton of information. Here's a list of the minimum that I give. Um, and go to Alpha Charts 365, click on subscribe right there. It's $10 a month. You get a ton of research for only a small amount of money. I mean, $10 a month, that's less than one Chipotle meal, right? So again, if you're serious about trading and want that extra edge, check it out again at Alpha Charts 365. All right, let's get into the charts. This is the SPY where we always start. You see a beautiful base. This area we'll call 455-ish, plus or minus, a little bit, maybe 460-ish. This area has been resistance. 1, 2, 3. Now we're up to the fourth time testing the area. Let's zoom into this area, and you can see that it is making a potential inverse head and shoulder, which means that we would need some sort of pullback, right? Don't know how deep that would be. And then maybe a breakout, and you could kind of finish off that inverse head and shoulder. Maybe it comes out here a little bit. As things have been coming into this potential resistance area, you can absolutely see how the volume has been kind of drying up, which means buyers are getting a little tired, in my opinion. So a healthy pullback, whether it's to 445-ish, whether it closes the gap to 441-ish, that remains to be seen. But 441-ish would bring it back down to real close to the 50-day moving average. Maybe it tags the 50-day again. What do we know, right? And that would actually give it maybe in kind of catapults above, and that would be absolutely fine as well, and still within the context of this new uptrend that really rocketed off the bottom. Absolutely rocket off the bottom. So that's what I'm kind of watching for. Things look tired up here, and it is a former area of potential sellers showing up. All right. On the week, let's see what the week showed. The week was up about 1%, and let's look at RSP. RSP was up about 1%, so about the same. That's good to know, right? So we see that it was a nice broad base move, even though we were closed on Thursday and only a half day on Friday. Plus, volume was super late on Friday because it was the day after Thanksgiving, and a lot of traders just took the day off, right? I'm looking at RSP though. Price back above the 200-day. That's always a positive. And we see a flattening 50-day. Again, that's constructive type price action. You have the little head and shoulders, inverse head and shoulders right there in RSP. Some good volume coming in, but it's RSP, so whatever. Anyway, so everything looks fine here, and there is some room to the upside. But we could also retest this 142, 143 area first, potentially. So we'll see the way it plays out, right? But again, everything looks constructive in that respect. Looking at the Qs, big picture. You see this 400 to 405-ish area. That's been, resistance in the past. And we're kind of close to that area. Not saying maybe we hit it, maybe we don't, right? We did not hit it back here. We're in this general area right there. So maybe this is where buy or sell show up. I don't know the answer to that. Again, it looks like we're kind of long in the tooth on this run. Maybe it goes longer, again, a little bit longer, but eventually there will have to be a constructive pullback in order for, good things to happen and continue to happen. Here's the weekly chart, and you can just see how it's a beautiful base, but nothing goes straight up, right? You're going to need some sort of consolidation, whether through time or price or a little bit of both, right? So Qs were up 0.89, equal weighted Qs were up 1.26. Very, very constructive action right there. I love to see the equal weighted up more than the cap weighted. It just shows a broadening of the move, which is great. And so looking at the equal weighted here, again, has that kind of inverse-ish head and shoulders look. If we can get a constructive pullback into this moving averages, even to the 50-day would be fine. If it goes back to the 50-day, you're talking about a 4 to 5% pullback. That's not that bad, right? It may feel kind of bad, and people will say, "Oh, we're gonna, go to zero," but that'd be actually a fairly constructive way to shake out some of this excessive bullishness that we see going on there. Going to the mid caps again, above the 200-day, even though the 200-day is still declining. It's good that it's above the 200-day. Going back 200 days, we're looking at February 8th. So as we clear out this data and build out this data, that 200-day hopefully will start to flatten, and this 50-day, we're in this area, I believe. On the 50-day, we're actually a little bit closer. We're in this area. So as this data gets taken out, that 50 days is going to start to really flatten and maybe even turn back up. And so again, things look pretty constructive on the mid caps, right? We'll see. I mean, the 58, 450-ish has to hold on it for sure. Could vacillate back and forth on the 200-day. I don't really care about that at this point, but this 50-day's got to hold and then move higher. Again, just looking at the weekly here, we have 1%. Again, that's pretty standard. Looks like across the board. Here's IWM. Now, IWM is a little bit different. It's the first index that we said is still below a declining 200-day moving average. Doesn't mean it's going to continue to do that, but that's where it is right now. And the 50-day still has not flattened yet. It's still declining. So a lot of mixed signals here. And again, mid caps and IWM, small caps, are both equal weighted by nature. It's the way they're built. But it does have this beautiful kind of inverse head and shoulders it's trying to build out. But again, just hasn't had that oomph that the other indexes have shown so far, at least. And really, when you zoom out, we are still in just a nasty, nasty range for almost 2 years now. If you bring back actually into this area, include this data, you're just at 2 years, right? So that's gross, right? When it comes down to it, that's just a gross, hard trading environment right there. IWM's got some issues. Again, first issue is get above 181 to get above this 200-day, which is just right above it. And then, let things start to heal. And at the very least, maybe get to this back to the 200 level, the top of the range. And then we'll see, right? That's a possibility. If this rolls over and breaks 173 and breaks 161, things can get very, very nasty very, very quickly. So that's the bearish case, right? That things are going to roll over and break 161. And again, that'd be a problem. But again, we're not there. And everything else looks constructive. So it may just pull the IWM along with it. It may not lead IWM, but as long as it participates, that's fine, right? That's bullish. Speaking of participating, we like financials to at least participate. So they broke this downtrend line. That's a big deal. You're gonna have the 50 crossing back above the 200-day, which is declining to flattish. I mean, really, XLF hasn't done anything for a very long time. They're just in a big, nasty, choppy range too. But I like that the 50-day looks like it wants to cross the 200-day, and prices above all of that and above this downtrend line, and now maybe coming to this 35-ish, between $35 and $36 area. Again, it's participating. It doesn't need to lead, but it needs to do well, and that's doing its job. That's constructive. Let's look at SMH. Here's SMH breaking out to all-time highs. And then you had the NVIDIA earnings and you have some selling pressure, but not a ton of selling pressure. And so at this point, it broke out and it's just kind of really moving sideways when you really look at it, letting moving averages catch up. They're all in uptrends. Bullish chart, right? I mean, as long as we're above 157, 158, something around there, I think it's a bullish chart. I think that things are looking good right there, right? Yes, maybe we get that pullback to 157, 158, maybe to the rising $23, and maybe the gap closes, right? That'd be around 157. That would make sense. Maybe it closes the gap right there, not this one, that one. There's a gap down here too. But that's still constructive, and it's just a retest of the breakout and would give us great opportunity to enter. So SMH looks really good. And look at the equal weighted SMH, which is XSD. When I say SMH, I should probably say semiconductors. Equal weighted semiconductor index. So it's looked always a lot weaker because it doesn't have NVIDIA and AMD and Applied Materials and Avangro, Broadcom, really pulling it up. It has equal weighted. So it looks more choppy, but when we really zoom in here, it's right at the 200-day moving average. So if we could get over, 2.25-ish or so, $201, we'll call it, it would be a beautiful breakout. Again, maybe it pulls back a little bit here, right? And then builds the energy to break out. That would be absolutely fine and very constructive. It's a flat 200-day, but again, we're flattening a 50-day right here, and just a little pullback, maybe to 9, maybe to 23, whatever, that's fine, to create that energy to move higher. So pullbacks right now look like they're constructive, potentially even viable. Semiconductors look great. If semiconductors are looking constructive, it's hard to be very bearish on the market. Let's go up here to home builders. Again, this tight range, we saw it back here. We're seeing it again here. Again, some sellers, there is some room to the upside, right? So maybe it gets to here, and then we'll see. Not my problem at this point. Again, look at this, just declining volume as it's doing this. But not my problem at this point. It's constructive, and that's all I'm looking for. Again, maybe it has some room to the upside, and then maybe it needs to let all these moving averages sort of catch up with a constructive pullback. Again, the other home builder index looks almost exactly the same scenario, even though it's got different constituents. So yeah, I mean, room to the upside, but it's constructive in its price action, and that's all we can go by. Looking at the transports, back above the 200-day, flat 50-day, flat 200-day. So it's trying to build out, and yeah, let it pull back. Let these moving averages catch up a little bit, and then go. So in the near term, I've said pullback's probably needed. Again, we don't know that that's going to happen, right? No guarantee, but it looks like it wants that. So we'll see if it continues, right? And let's go with the equal weighted transports here. And you see they're not quite as, just like SMH, not quite as good looking as their cap weighted friends. But it's not terrible. I mean, we're above the 50-day, even though it's still declining. And, when you look back and when 50 days are, as we get into next week and we start to take out this data, right, this 50-day is going to start to flatten out. The 200-day, as long as price stays above this area, will start to get above. And you do have a declining 200-day, but again, if you can get price back above this area, that should start to flatten out as well. So not a terrible look. I'm not trying to massage the chart or anything like that, but it's not a terrible look. And again, we have some participation. That's the bullish scenario. You're basically into here, right? And again, a little pullback, maybe just the 50-day, right? $72 or so, and then a breakout, and that would be really, really constructive, right? So all of these charts we've seen so far, again, short term, extended, needs a little break, needs moving averages to start to catch up and just to straighten out a little bit on the bullish side of things. That's cool. So short term, a little wary. Longer term, things are still looking very constructive. Of course, that could change, but right now it's what it is. Let's look at the internals. We have the VIX at 12, right? 12 and 12.45. It's very, very low. Very, very low. Hasn't been this low in years, um, which is great. But again, once eventually there'll be a snapback. Again, I'm not saying we're gonna get a COVID style snapback, which was pretty significant, but when it gets this low, again, it could chop around down here for a few days, but usually you get some sort of snapback. That would play right into the idea that in the short term we need a pullback, right? That would just totally make sense. Is in the short term we need a pullback. Looking at credit spreads, right? There's trouble in these markets. I think we'll see it in credit, and really in the end, we're just not seeing it. It's actually at the lowest end of the range, which means again, you may find some support here and some snapback. Another lower high would be really constructive at this point. We're still in this general range, and that would be my guess is that you're going to get a again, we're right in the supportish area. And I don't know if things happen Monday, but a snapback would make sense, which is usually a negative on the market. Okay. Looking at the percent stocks above the 50-day moving average, we're at 66%. Yeah, there's room to the upside. It's not an extreme. So that's what I'm looking for here. I like that there's room to the upside. It kind of stopped around 75-ish last time. Maybe we get up that way, right? Before we get some sort of pullback. And again, it doesn't have to go all the way down to the green level, but you could see how, it may go down to 30%, may go down to, 40%, whatever. But there's room to the upside. So that's fine. And then let's look at the call ratio and how extreme are people. And again, they're not, man. You have the Bulls and the Bears just battling out right now. We haven't had an event to cause everyone to go to one side of the market or the other. The last time I feel like we were at extremes was in October, right? And that was, a sign a little bit early, but a sign that the market was healing. And really, if you started buying, after this signal right here, you probably did pretty good because you were already at least partially invested come November. Not that things were easy right at this signal, right? So nothing's a perfect timing mechanism, but this did show that there was an extreme bearishness right over here. So if you slowly entered, guess what? By the time you were in November and the big up happened, you at least had some positions already established. So nice job if you use that signal. And then let's look at the dollar, of course. Dollar here, DXY. And the dollar continues to fall. Let's just change that. The dollar continues to fall. And I think that is giving us a nice little boost to equities, right? If we see a big rise in the dollar back up towards this 105-ish area, that could be a problem. But as of right now, again, we can kind of, see how this was really an important area. Maybe we retest 105.50-ish from the underside, but overall, this looks nice. Good tailwind for equities. And the last one is we're going to look at TNX. 10-year yield again made a little U-turn here. We don't know that this is the start of anything major, but did fall very nicely. I think helping out equities at some level as well. So we'll keep our eye on this to see if this is the start of something more, maybe back up to, retest this 5% or so. That wouldn't be terrible, right? I mean, as far as expectations and all of this, the nice thing about this type of move is it's all getting priced in, right? Now that we're pricing things in, I think the market can act a little bit more naturally, right? So that's what I'm watching here. Again, nothing that would make me overly cautious, but maybe we get a lower high, maybe 4.75, 4.8, somewhere around there. 4.85, something like that. That'd be part of a pullback scenario, right? So I think that's where I'm at right now. I think that congrats if you made money in here. Hopefully you did. If you didn't, you may want to consider my educational group, because we we got long. One of the things that I really try to do is determine when the market is good and get long, and we got long right at the beginning of November. So yes, we missed these first couple of bars, right? But we got long right at the beginning of November, and we're able to capture a large part of this move. And so expect maybe some sort of pullback now, and then not to get too bearish, but don't forget to take profits. All right. Hope this video helped you. Follow me on Twitter or X at AlphaCharts365. Like and subscribe to my YouTube channel. Hope you have a great week. We have about 1 month left in this year. Let's make it our best. Take care.